Hello, everyone. Hope you're all having a good weekend, getting ready for the Super Bowl. My name is Mark, aka the Stock Market Jobber. I am a former institutional trader. I was the head of trading at three different big money management firms. We all managed in well in excess of $1 billion. I was also traded directly for Steve Cohen, the great hedge fund manager, and Mario Gabelli, the great value manager. So when it comes to trading, there's not too much I haven't seen. So I want to just take a quick look at MGM here and just give you a little lesson about what people, with my experience, look at. Institutional traders do not look at weird, crazy, esoteric things like, I don't know, Fibonacci retracements. We look at what levels are important, what are the trends, what's the momentum, okay, and what's the psychology. And every chart tells a story. Chart should be viewed through the prism of supply and demand, all right? We shouldn't really worry too much about what's this pattern, what's that pattern. So let me just point out a couple things that I see here. All right, so here we have support, and this goes back 2 years. And when you have a level that's important for a long time, we call that market memory. So this is just above 35 was support back here and here, and then here the support broke. And notice how the level that was support turned into resistance. This happens because of buyer's remorse. So we're seeing psychology right in the chart here. There are people who bought, and when the price went lower, a lot of them decide that, assuming they still hold it, decide that they made a mistake and they want to get out, but they don't want to lose any money. So they decide to sell it if it gets back to their buy price. So we have remorseful buyers placing sell orders, and that converts what was a support level into resistance. It's a very common phenomenon. We could see here, I don't know what the news was. I assume it was earnings a few days ago. The stock jumped up. Now, where did it find resistance or a large group of sellers? Right where it did here last April. All right. So this is what we call market memory. When a market's trending higher, it's because there's not enough supply or sell orders to fill all the demand or buy orders. When we get to what we call a resistance level, there's more than enough supply to fulfill all the demand. And that's why things tend to stop going higher when they get to resistance, like down here. There tends to be resistance at former peaks. So if you own something and you considering selling it and you're trying to figure out where should I sell this, well, look on the chart and see if it's getting close to a former peak. Markets don't go in straight lines. They go in peaks and valleys. All right, now let's look at something here. Speaking of the peaks, notice how these peaks formed at a lower level than the prior peak. Well, I mean, this was in here, but we got this peak here was lower than this, and this was lower than this. That tells us as time is going by, the sellers are getting more aggressive. They're willing to take lower prices. And I can just draw on a line here. I'm not very good at drawing, but okay, so we can see that support, and then we could see that these lower highs. So this is what we kind of call a descending triangle pattern. And what does it illustrate about supply and demand? Remember, that's every chart you look at, you got to think about supply and demand because that's how, as traders, we make our money is by finding things that are out of equilibrium. If something's in equilibrium, it's not going to move, and we don't want that. We want things that are going to ready to move. So we got this support, and this kind of shows the buyers are kind of just complacent. They're okay with just chilling down there and just waiting. But the sellers are getting more antsy. So this was a clue that the resistance was or the support was going to break. Now I know this is hindsight's 2020, but in the class or in the stock market jobber, we look at stuff every day and take real time assessments of it. But I just thought this, given that it's the Super Bowl, I figured let me just take a look at one of these casinos. Now here we have the exact opposite. We can call this the ascending triangle. We have the sellers who are content to stay up at their level, but as time is passing, that there's higher lows. This shows the buyers are getting more aggressive. So this was a sign that this resistance would break and we would eventually move higher. So one of the important things to do is to let the market tell you what to do and not guess. And how does the market talk? Well, by how it acts when it gets to certain levels. Now let's talk about momentum. This down here on the bottom is your basic RSI momentum indicator, just to the default settings of 14. And momentum is a measurement of how far something has moved from time period A to time period B. In this case, it says 14, so it's 14 days. We can see that this is a day calendar, or each of these rectangles is one day. So If in the past 14 days this thing, well, let me go back for a second. Um, Most securities spend most of their time trading within what would be their typical or usual trading range. When something gets above that, we call that overbought, and something gets below it, we call it oversold. Now, this is important because if something is overbought, it'll attract sellers into the market because they're going to be assuming there's going to be a reversion to the mean, meaning the price goes lower, and they might knock the price down with their sell orders. And if something is oversold, that's going to attract buyers into the market because they assume it's going to reverse to the mean, and that means it'll go higher, and they might drive it higher with their buy orders. So let's just take a look here. We got oversold here. It was a good time to buy right there. We got overbought here, and that was a good time to sell. So if you bought this based on, all right, we're oversold and we're at a former support level, where should I sell it? You could tell yourself, all right, I'll sell it when it gets overbought. So you would have sold it right here. We can see down here, oversold, that coincides with this spot. Overbought, coincides with this peak. Oversold, this peak, and overbought was right at this top. And didn't quite get there, but it's close enough. Good enough for government work, as they say. Oversold, and that was here, and this was here. So we're just letting the market tell us what to do. You want to know where to buy or sell? Well, don't guess at a price. Look at the charts, see where the supply and demand is. That's letting the market tell you what to do. It's better than guessing. So remember, levels, trends, momentum, and investment psychology. Those are the important things to focus on, and that's what people in the institutional trading world think about. So I hope you all enjoy this brief lesson and learn something from it. And please join up or subscribe to the Stock Market Jobber YouTube page. Check out our website, and I will see you soon, everybody. Thanks. Have a good afternoon and enjoy the Super Bowl.